All right, so we're doing some Q&As, and we already have a couple questions. So first question is, do I have a trading plan and can I share it? So in the pinned section of the Active Futures chat, there's a link to it. If I can find it, I will post it. But mainly, my trading plan is I look at what price is doing in relationship to the previous days, previous session, overnight session, and I look at where volume is. I look at where price is being accepted, and I come up with different scenarios that I think could play out during the day, and that's usually the video that I do in the morning. And then I have those scenarios in the back of my mind. Like, for example, today I said that we needed to repair the little bit of lack of excess that we have from the overnight session. And then I said that we're probably going to have some resistance at the 55.60 area. So when I saw that we were being strong, buyers were strong, I went long, but I knew that at this area I could expect some kind of a pullback. So when I saw that this was not moving higher, right, my scenario was like, okay, well, if we come back into the range, we're possibly gonna attempt to come out to the other side of the range. And then the other scenario was, if we take the lows, we're probably gonna go fill the gap. And so we took the lows, and now I'm short because we're targeting the gap fill, right? That was my plan. Now, in the middle of the day, what I do is that I'm looking at those scenarios, but to enter my trades, what I use is, for example, this low volume nodes that happen during the day. So if I see a strong push below the overnight, I want to enter at a point where I could enter here at the break, right? But I want to put my stops and use the structure of the market to place my stops. So in this case, let's say I put the stop up here. Once we get below the overnight low, I can move my stop here above this above this low volume node. So, and then I hold until I try to hold either until we hit the target or until I see that things are reversing. Sometimes I scalp in and out of that position. For example, if I enter here and then I see that we start getting this little bit of volume and this keeps holding this low volume amount, so I might go short here, cover here, short here, cover here, until this thing starts going again, right? But basically my plan is based on that, and then there's a lot of nuance to it that's based on looking at market internals, right? I want to see market internals supporting the move that I'm looking for. I want to see ticks confirming. I want to see volatility confirming. And I do have a basic write-up of all of this, but I can't find it right now, so I'm gonna send it to you when we finish this.
All right, great, thanks.
All right, no problem. Now, how do I use the DOM? Great question. So, reading the DOM is a little bit of it's a little bit of an art, I would say, because it's not it's not something that I could tell you, okay, well, this is how you read it, and whenever you see this, then do that, and whenever you see that, do see X, you do Y, right? Like you cannot use it like that. But what I do, can you see this DOM right here? This is ES, right? What I
Yeah,
use.
we can see it.
So this is obviously the price. This we have the bids and the asks. So this is the recent bids and asks. So you can see there you saw 183 buyers, 146 right now, 114 sellers, right? So you can see the orders that just happened, right? Like you don't see that on Thinkorswim or any other of those platforms. You need like a real DOM. Here you have the order book, that the limit orders, right? And here is what actually just happened in the moment, real time. So the way I use it is like add key levels, right? Right now we're sitting at the point of control. So at the point of control, you're gonna have both, two-sided tape, right? You're gonna because this is where prices have been accepted. But you see that? You just said, oh, that was a perfect example. You saw a huge amount of sell orders, right? So 604 sold at $54.99. So sellers are really pushing, and you can see who's stronger and who is weaker, right? So, usually now you see how we reacted there, like we tried to get above that area again and we sold again. So that's the way I use the DOM, right? So sometimes you see like big orders coming in at a certain level, and you can use the DOM to see, okay, well, I'm gonna go with those orders. I'm gonna put my stop 1 or 2 ticks above it, and so you have very little risk. But I use it at specific levels that I'm looking for. I don't use it just at any point, right? If I'm looking to enter at this low volume node, for example, then I'm gonna try to look for the order flow and use that for confirmation of my entry. And then you have the liquidity. You can see that there's a lot of orders here sitting waiting to be filled. So you can use that as areas where you know that if we get here into this area, there's going to be some sellers waiting to get filled on those orders. I don't use it to make decisions, but I use it to know the areas of interest. And then the second part of your question was, where do I see the pulling and the stacking? You can add a column on this, on the DOM, that you have the pulling and stacking, but the way I use that is I'm looking at this indicator right here. This is a custom-made indicator, but there's many ways to look at this, but this is basically the book strength, right? So this is telling me if you take all the bids, add them together on ES, right now there's 1,500 on the bid, and then there's 1,100 on the ask. So I'm looking at that difference between the bid and the ask. When I see this high thousands, it's pretty much balanced, right? So for example, if now we see that they start pulling the offers and this red number goes down to like, I don't know, 500 or 300, and then the bid stays elevated, stays high, then there's a high possibility that we're gonna start moving higher. And you can see now that they're pulling the offers, the bids are stacking, and we're moving higher. You see? You see now 2,000 on the bid, 800 on the offer. Now, if this reverses, then you know that, okay, maybe this move is over for now. So when you have, for example, right ahead of news, you see all the bids and the offers being pulled off the book, right? So then you see these numbers becoming negative. So that means that they're pulling them. And then that means that there's less liquidity. And that means that the algos can do whatever the hell they want and they can, run stops, etc. So I usually, if I see that they're pulling everything on the book, I just get out. Because I don't want to be, stuck in the in the middle of the craziness with the algos. Does that answer the question?
Hey, on that strength indicator, the numbers up for the bids and asks, how tight are those to the current price, or are they the bid and ask at the current price or within
So that's
certain amount of points?
So those are the certain amount of. I have it limited, so it's not looking at the whole book. It's looking at a certain amount of levels. But it's the amount. Like if you take, for example, ES, right? So it's adding all these orders, right? It's adding everything that's on the bid, right? It's up to a certain level, because I don't know. I'm not adding all of it, right? There's like, thousands of orders, right? But so this is just a few levels that I'm looking that are close to the current price, because those are the ones that are more relevant, right? Like who cares if there's an order down here at 54.70? We're not gonna get there anytime soon. So so I'm looking just at a certain amount of level. I don't know how much that is. I have to check on my charts, but I can check right now if you were curious about that. But
Yeah, it just eyeballing it looks like 10 points on ES either side.
I would have to check, to be honest. I'm not sure. Let me see. Hold on.
But that's okay, unless it's easy to check. But
No, I think it's more, but this is I'm trying to see something. Hold on, give me a second. So, but okay, so I sorry, I apologize. I said this wrong. So this is not the limit orders. It's calculating the pulling and the stacking of the orders, right? So basically, if you right now subtract 100 orders from the bid, this number is going to come down. If you see how it went from 1,000 to 500, that means that they added 500 bids in the book, right? So it's looking at that, not at the orders that are sitting there, but the orders that are being pulled and stacked in the book real time. And it's not 10 levels, it's like something like 30 or something like that.
Okay, and then the orders that happen to be that get filled in that amount of time, that affects the total as well?
Not in this specifically.
Not in that. Okay.
That for that you can look at the DOM right there. Like you can see that's happening in real time. Does that make sense? I know it could be a little confusing because it's the pulling and the stacking is a specific. Let me see if I can show the column specifically. Hold on, let me see. I'm trying to I can't find where this specific, where I have this menu to add this thing. Hold on. But anyway, so maybe I have it in a different. Okay, so in this, I have another DOM right here that I can show you. So this is for ES too. You see this left column where it has all these negative numbers, and the right column that has the green numbers, right? So if you look at this, when at a specific level they're adding orders, it becomes positive and it adds to the stacking of the bids. When it's negative, it means that they're pulling those orders from those specific levels. So all this negative numbers means that there was a bunch of bids here and they got pulled. So the sum of all this is what I have in this indicator. You can see that here, these are the amount of levels. So
Okay, gotcha. So right now you would say they're pulling the bids.
yeah, right now, like you could see, but that's why I made this indicator, because it's easy to see the lines crossing. So when you see the green line crossing down, that means that they're pulling those bids and they're stuck in the offers. So now it's easier to come down, right? It's easier for price to move down. So, if you're like scalping real time, I think this is a very useful indicator, because right now it's going to be hard to bounce. Right now, there's they're not going to be able to bounce it with 1,700 on the offer and less than 1,000 on the bid. Now, if this shifts, then you know that you can attempt to catch a bounce. You see now, they're stacking bids, and now we're bouncing a little bit. So so that's how I use that. I use ES because NQ goes crazy. NQ is like up and down, up and down. So I use ES as a guide, and then look at the price on NQ for confirmation. Sometimes NQ is better when you have extreme numbers, like a very negative number or a very positive number, and then you can use those for confirmation if you're on a trade. And if you see them shift, then you can either stop out or tighten your stop or whatever. You mentioned once or twice 1 minute charts. How do you use them? Okay. So I have a screen. Let me see. I have a screen like that, in where I have NQ and ES, and then I show 1 minute, 5 minutes, 15 minutes, and 1 hour charts. So hold on, I'm trying to. Sorry, this thing keeps changing. Hold on 1 second, because my OBS is just. There you go. So what I do is that I'm looking at the 1 minute chart to see when at a level that I'm looking at, right, at an area where I'm looking for a reversal, a specific time of the day, for example. The first thing that I see is, okay, are we getting higher highs or higher lows in the 1 minute chart? In this case, for example, if this is a 5 minute, I'm gonna be looking at, okay, if I have, this is the low, this is the high, but where's the next high? The next high of the 5 minutes is way up here, right? So in order for the 5 minute to start reversing, I want to see a higher low and then break this higher high, right? So that's gonna the first time frame that's gonna reverse is obviously the 1 minute, right? So I'm looking at that first, then I get confirmation in the 5 minutes. Usually the 5 minutes is more important when you have a reversal, to get a confirmation of a change on a trend usually. But that's how I use it basically. It's like, you know, I'm looking at how we are on the structure on each of the time frames, right? So if this is the high right now, we have the previous swing low here. So I know that here there's going to be probably going to be sellers. If I look in the 5 minutes, you have the same right now, the same spot, right? But sometimes you need to zoom in and be a little bit more granular if you're scalping short term, and you know, if you're just scalping a few points. You know, if I say, okay, we cannot take this low, and I want to take a long here with a stop below this low, then I'm going to be looking for a move to this price right here, which is the previous support, right? So that's how I use the 1 minute chart. There's not really too much of a science there. It's just I just like to look at all time frames so that I keep track. I keep an eye on what's actually happened instead of being just focus on one time frame where you can easily lose track of where you're at with you know, in relationship to the higher time frames. Like you see the hourly time frame, we're stuck in this range. So if you start seeing an uptrend on the 1 minute, you could easily think, oh well, we're moving higher. But then like when you go here, you're like, okay, well, what about all this consolidation? Are we gonna just go through easily? No, I have to keep an eye on all of them. But when I use this in combination with volume, you know, I feel like it makes things easier to see and easier to know where we could be heading. Like right now, for example, if you look at, you know, this is looking like, okay, it wants to die, right? It wants to go down, right? This is ugly price action, everything is pointing down. But then you look at the volume profile and look at this. We have this very faded volume here on NQ, which means people don't want to trade here. At least not yet. Right, same here. We have excess here, very thin volume. So when you see that this starts becoming thicker and more volume gets traded here, then I have confirmation that, okay, well, traders want to trade lower, and now we can look for shorts. So, you know, nothing on its own, no tool on its own, it's the it's the holy grail, or is what you should be basing your trades on. You should be using everything in conjunction and put together a story or a narrative so that you say, okay, if this happened, then I can do this. If this doesn't happen, you know, then I'll do that, right? For example, now that if we know that we're thinking that there's a possibility of a gap fill, right? You know, I would be interested in this area on ES to take a short trade to target the gap fill, right? If I enter the trade here, could it work? Yes, but I see already thin volume, and I already see that people don't want to trade here. I see it's holding, so I'm gonna want to enter here at the first touch of the single print, right? Or, you know, same thing on NQ. And then see if I have a couple of contracts, maybe take one at the point of control and then one at the lows, and then see if I can get a continuation. So that's one way of doing it. For that, you can either use the volume profile or you can use the 1 minute chart, the 1 minute chart that I was showing before. If you like looking at candles, you can look at that and you can say, okay, well, I'm gonna take a short at this previous swing low because I know that there's low volume here because I'm looking at the other chart. Sorry, I was looking at the wrong chart, right? At this previous low, take a short here, target the middle of the range, and then see if we can continue lower. So in fact, I'm gonna do that now. I'm gonna take a short here at 16. Let's see if how that plays out. So 16, I'm gonna put my stop inside this area of previous consolidation. I can use this candle, I can use the top of this candle. I mean, I can use so many things here, but I'm gonna put my stop at I'm on NQ, so I'm gonna put it at 935. So 935 is right here. 935 is right here. So it's, this candle's right here. And if you look at the hold on, let me switch screens. If you look at the volume profile, you see there's a little ledge here of volume. You see that? So above that is where I put my stop. I didn't get a fill, but because I put my order at 916, but you can already see that there's sellers already at the top of this little range that we're trading at right now. So you can also do that. You can also look at this as, in a micro time frame. If you're speaking of micro time frame, you can say, okay, well, this little range is a balance area, and we're either gonna trade in this range and keep going back and forth towards the middle of that range, or we're gonna break out of that range and then go to the next range. So because my bias is short right now, because we have this gap right here, we traded below the lows, I'm thinking, okay, well, go short at the top of the range, take some profit in the middle, target the bottom of the range. So that's how I keep looking at throughout the day to take small scalps. You see how we're rejecting this area already? We're coming back into the point of control. And usually I pay attention also to times of the day, because usually breakouts happen at specific times of the day where there's more volume. So in the morning, at this lunchtime it's usually choppy, and we get some, because there's less volume, we have algos that can manipulate the market and play games and run stops, etc., and make you think that the move is over and have people chase, etc. So maybe if I'm thinking that we're gonna fill the gap, I'm gonna wait for clear confirmation at a time that I know that there's gonna be more volume, like either 2 p.m., 1:30 p.m. or something like that, right? And in the meantime, scalp the smaller ranges. So the midnight, the question about the midnight reversal. So I always mention that midnight level. And so midnight is a concept that I started seeing people talking about it on YouTube, and I watched some videos. People keep talking about midnight open. I don't know what the hell it was. So I started I started looking at, I put it on my chart. I said, okay, let me look at it. And I noticed that pretty much every session we go back to midnight. And it turns out that midnight is like when the banks open, when their trades open at midnight or something like that. I forgot exactly why it's relevant, but it turns out to be relevant. So I keep an eye on it, and what I look at is, for example, today we opened close to midnight, right? But if we're very far away from midnight and I see that we just grab some liquidity, like today we broke the highs of the day and there start to be a reversal, then I'm looking, okay, where's midnight and can we go there and retest it? Today it worked out great because we were all the way up here, and then Q, it's both, like we were way up. And then on the reversal, I target usually that midnight level. And if you keep it on your charts, you'll see that we keep going back to it over and over and over and over. Okay, I just got fill on that short on NQ at 916, but maybe I'll see, because now it seems like it's pushing higher. I'm gonna target the middle of this price, of this range at 890. Let's see if that plays out. It's like a little bit better than a 1-to-1 risk-reward ratio. Let me see. So is it doing higher highs and higher highs now? So if you look at the 1 minute chart, yes, we do have higher lows and higher highs. On the 5 minute, we also have a higher high and higher low. And on the 15 minute, well, let's look at it together. So 1 minute we have this lower low. We have a high, we have a higher low, right? And then we have a higher high. On the 5 minute, we have a low, we have this high right here, higher low, higher high. So you could say that this is reversing now. 15 minutes, we have this crazy move, and this low is higher than this low. And on the hourly, we have this low, this high right here, and we still have a lot of time until this resolves. So we still are in this big range, and this, what is this low? Is actually, this low is higher than this low right here, right? So you could say that we're starting to put higher highs and higher lows in all time frames now. But it's the action is a little weird, right? Like this high right here, it's a very wiki. I just had my take profit at 890. So that trade worked. So little trades like that, you can literally scalp all day. I hope this is helpful and it makes sense what I'm saying. Okay, good. So yeah, you can say here, you can say that this range right here, if we come back above this high, then you can consider this 5 minute range tested, and then if it fails to hold it back inside, then you can look for an expansion to the upside and to test this area. But I usually look for the reversals to happen around 1:30 to 2:30 p.m. If they happen before, I'm a little suspicious. There's usually a noon, like I said, usually what I find is that at noon there's like an algo playing games, like we just saw a push all the way to up here. And sometimes we see like a big push around noon, and then the move continues later on, around 1:30 to 2 p.m. Are the red and blue blocks a study indicator? Yes. So those are single prints pretty much, which I look at in all time frames, right? So if you see the low of this in this 5-minute chart, the low of this candle, and then the high of this candle, this high never tested inside the range of this candle, so they left this single print, and you see how we rejected that area. So the first touch is very important in those single prints, and the longer the time frame, the higher the time frame, the more significant they are. So in the 15-minute, almost always the first time that it touches, you get a rejection. Some people call it fair value gap, ICT, the guy that came up with that name, but it's nothing more than single prints. And all the youngsters call it fair value gap. So the study is called fair value gap, but it's not included in Sierra. It's you have to get it separate. I can send it to you if you want. So now if you see now, watch this high, and if we come back about this high, we're likely gonna retest this area of single prints. But also, what you want to be looking at is, okay, so this is NQ, right? But look what's happening with ES. Not even close to being the same picture, right? We're still in that range, and it's not making higher lows. So I wouldn't be trusting NQ, because NQ likes to run stops, and ES is a little more reliable in that sense, that it's telling us that this is not shifting trend yet. Even though NQ is stronger, it's not turning yet, because NQ cannot reverse without ES. It just can't. Maybe temporarily for a little bit, but not completely reverse. So you see now ES is making new lows, probably about to close that gap, which we have coming up. It's taking forever, but it looks like we're almost there. All right, so I hope it's making sense. And the other thing that I look at, and you guys know it because I talk about it all the time, but I look at the bigger time frame, and right now, to get a better idea, what I do is I turn on the longer time frame volume profile and see what happens, where the volume was, right? Where was the acceptance of price when we were at these levels in the past. And you can see that this area had acceptance. We were, we had a few days here that we were balancing. Let's see if I can join this. and you can see that if we fill the gap, we could get into this area and tag this untested point of control. It was the point of control for 2 days, right? For this one and for this one. So, and you can see that there's a lot of volume that traded there. So we are, if the move continues, we're likely to tag this area. All right. Any other questions? No more questions? All right. Well, I hope that was useful. And we can do more of these if you guys want. But remember, one thing that I want to mention that I want everybody to ingrain in their heads is that no matter what indicators you have, no matter what you're looking at, no matter if you know what price is going to do or not, number one thing that you got to remember is that you are in the business of managing risk. Everything else doesn't freaking matter. Like, I can pick any random level and put a trade that has a good risk reward, and it's either gonna work or not. But as long as you manage your risk properly and not oversizing, and making sure that you only risk a tiny portion of your account, then that's gonna be the number one thing that's gonna have you be successful. No fancy indicators or that you can only start seeing and getting a good feel for what price is gonna do with experience, and with screen time and watching price and not getting to know your specific product that you trade, whether it's oil, gold, Nasdaq, whatever. You're gonna get a feel of how it moves, but just keep your risk under control, and you will do good. All right. Yes, I'm gonna post the recording, and it's gonna take a little bit to upload and process. All right, good stuff.
Thanks, Gabe.
Thanks for your
That
questions.
was awesome.